Inflation is supposed to be the villain of your financial story. Every headline screams that it is stealing your money, draining your savings, and quietly making your life more expensive by the day. And yet, during the worst inflation in 40 years, the stock market hit record highs, real estate exploded, and gold went vertical. So if inflation is so bad for you, why does it make the rich so much richer? The answer is the most important money lesson you will ever learn, and almost nobody explains it honestly. My name is Marcos, and I have spent the last decade obsessed with one strange question. Why do the same forces that crush ordinary people quietly make wealthy people even wealthier? Most financial channels will tell you to just beat inflation without ever explaining the machine underneath it. But once you see how this machine actually works, you stop feeling like a victim of the economy and start using it on purpose. If you want the real mechanics of money, not the recycled advice everyone repeats, make sure to watch until the end of the video. Here is the reality most people are living inside today. You work hard, you earn more than you did 5 years ago, and somehow you feel poorer than ever. The grocery bill that used to be $80 is now $140. Your rent climbed, your insurance climbed, and your favorite coffee quietly went from $4 to $7. You feel it most at the grocery store, at the gas pump, and on every bill that lands in your mailbox. You got a raise, but it evaporated before it ever reached your savings account. And no amount of extra budgeting ever seems to fully close the gap. So you do the responsible thing and you save. You keep your money safe in the bank, away from risk, where nothing bad can happen to it. And that single decision, the one that feels the most responsible, is quietly the most expensive mistake of your financial life. Every month, prices drift a little higher and your money quietly buys a little less. It is slow enough that you barely notice it, and that is exactly what makes it so dangerous. Inflation is the only tax nobody ever votes for, yet everyone ends up paying it. You are doing everything you were told to do, and it still feels like you are falling behind. Quietly, year after year, the ground beneath your savings keeps moving, and standing still on moving ground means you are slowly being carried backward. This is not bad luck, and it is not a personal failure. It is a system working exactly the way it was designed to work. And here is the part almost no one tells you. Inflation is not destroying wealth, it is transferring it from people who hold cash to people who hold assets. Most people respond by trying to earn a little more and spend a little less, but you cannot outbudget a problem that is built directly into the money itself, and the people at the top of the economy are playing a completely different game than you are. To understand why assets soar, you first have to understand what inflation truly is. Inflation is not really prices going up. Inflation is the value of each dollar going down. Imagine the whole economy as a fixed pool of real value and dollars as tickets that claim a piece of it. Print more tickets, and each ticket simply claims a smaller slice of the same pool. Now imagine the government and the banking system print trillions of brand new dollars. The pool of real stuff did not grow. There are still the same houses, companies, and gold. But suddenly there are far more dollars chasing that exact same pool of value. So each individual dollar is now a claim on a smaller slice than it was before. In 2020 and 2021 alone, roughly 40% of all the dollars in existence were created in under 2 years. Economists track this with a measure called the money supply, and in those years it went almost straight up. In a single stretch of 2 years, the supply of dollars ballooned at a pace never seen in modern peacetime. That flood of new money had to land somewhere, and it landed in prices. Every new dollar dilutes the value of all the dollars that already existed. It is the same logic as a company printing endless new shares. Each one you hold becomes worth a little less. When the number of dollars explodes like that, prices do not rise randomly. They rise because the measuring stick itself is shrinking. Most people think a central bank fights inflation, but few realize it is the engine that creates it. Nobody walked up to your bank account and physically took anything out of it. Instead, your dollars simply lost purchasing power quietly while you were not even looking. And here is where it gets genuinely interesting. This shrinking stick does not hurt everyone equally. If your wealth is stored in dollars, you lose. This is not a conspiracy. It is simply arithmetic that almost no one ever bothers to explain. More dollars plus the same amount of real value can only ever lead to one outcome. If your wealth is stored in things that cannot be printed, you win. Now let us talk about why this trap is so hard to escape, because the answer lives inside your own brain. Human beings are wired to think in something called nominal terms. That means we see the number on the price tag, not the real value hiding behind it. Your brain treats the dollar like a fixed ruler when it is actually a melting one. If your salary jumps from $60,000 to $70,000, your brain throws a party. You feel richer, even if everything you buy has quietly gone up by 20%. Economists call this the money illusion, and it is one of the most expensive blind spots in human psychology. The illusion makes you feel safe holding cash because the number in your account never goes down. You open your banking app and you see the same comforting figure staring back at you. But that number is a liar. It tells you that you are standing still, when in reality you are sliding backward every single month. We feel the sharp pain of a sudden loss far more than the slow ache of being diluted. Psychologists call this loss aversion, and it quietly pushes you toward the worst long-term choice. So watching cash sit untouched feels comforting, even while it is silently bleeding value. Think about the last time you got a raise. Did you check whether prices had risen even faster? Almost nobody does, and that tiny blind spot quietly shapes entire financial lives. Meanwhile, the people who understand this illusion do the exact opposite of what feels safe. They borrow at fixed rates, they buy hard assets, and they let inflation quietly pay down their debts for them. The safe feeling and the smart move are pointing in completely opposite directions. Here is the part that will probably surprise you. The wealthy are not necessarily smarter than you. The number feels solid and real, so trusting it feels like the obviously safe choice. But in a world of constant printing, trusting that number is quietly the riskiest move of all. They simply refuse to trust the number, and that one decision compounds for decades. So now we arrive at the core paradox, the exact question that started this whole video. If inflation is so damaging, why do stocks, real estate, and gold soar right through it? The answer is beautifully simple once you finally see it. Assets do not rise in spite of inflation. In many ways, they rise because of it. Think about what a single share of stock actually represents. A share is a claim on real factories, real brands, real inventory, and the power to raise its own prices. When inflation hits, that company simply charges more for everything it sells. Its revenue rises in those same inflated dollars, and so does the value of its shares. Great businesses have something powerful called pricing power. They can raise prices faster than their own costs rise, and they keep the difference as profit. That is why the strongest companies often grow even stronger during inflation. Real estate works the same way, only more aggressively. A house is a physical asset that cannot be printed, sitting on land that cannot be created. As dollars lose value, it takes more of them to buy that same scarce house, so the price climbs. But here is the secret weapon almost no one talks about: the mortgage. When you borrow to buy a home, you lock in a debt fixed in today's dollars. Then inflation slowly melts the real value of that debt while the house itself keeps rising. You are effectively repaying the bank with dollars that are worth less every single year. Commodities like oil, food, and metals follow the very same rule. When the dollar weakens, it simply takes more dollars to buy each barrel and each bushel. Gold tells the oldest version of this same story. For 5,000 years, it has held value precisely because no central bank can print it into oblivion. Real things hold their ground while paper money slowly slips beneath them. So the pattern becomes obvious. Anything scarce, productive, or impossible to counterfeit acts like a life raft when the currency is sinking. This is exactly why the wealthiest families measure their fortunes in assets, not in cash. They are not chasing dollars. They are chasing ownership of the things those dollars can buy. Inflation is not lifting these assets up. It is pushing the dollar down beneath them. If this still sounds like a theory, let me give you the numbers that turn it into a fact. Look at the 1970s. the most infamous inflationary decade in modern American history. Over that stretch, the dollar lost more than half of its purchasing power. Savers were quietly destroyed, as a lifetime of cash was cut in half in real terms. But gold went from around $35 an ounce to over $800, a gain of more than 2,000%. Real estate roughly tripled, dramatically outrunning the rising prices all around it. Picture two neighbors who started that decade with the exact same savings. One held cash and one bought a home, and 10 years later their lives looked nothing alike. Now jump forward to our own era, the inflation surge of 2021 and 2022. The official cost of living jumped at the fastest pace in 40 years, and headlines warned of doom. Yet from the depths of 2020 to the end of 2021, the stock market more than doubled. Home prices across the country rose by roughly 40% in just 2 years. The savers who played it safe watched their cash quietly lose value year after year. The owners who held assets watched their net worth climb to all-time highs. Stock owners did not just protect their money, they multiplied it. The painful gap between savers and owners widened with every passing year. Same economy, same inflation, two completely opposite outcomes. This is not a one-time fluke. It is a pattern that repeats again and again. Every time the printing presses run hot, the very same story plays out. History does not whisper this lesson. It shouts it across every inflationary decade on record. The dividing line was never income, luck, or intelligence. The numbers are not opinions, and they simply do not care how any of us feel about them. Across every single era, the owners pulled steadily ahead while the savers quietly fell behind. The dividing line was a single question. Did you own things or did you own dollars? Once you truly understand this, something changes inside you, and it is bigger than any single investment. You stop seeing yourself as someone money happens to, and start seeing yourself as someone who positions for what is coming. The old version of you watched the news about inflation and felt a knot of helpless anxiety. The new version of you hears the same news and calmly asks a very different question. What do I want to own before those dollars lose even more of their value? You stop trying to save your way to safety inside a currency that is designed to shrink. Instead, you become an owner of businesses, of property, and of scarce assets that work for you while you sleep. Your relationship with money quietly transforms from fear into strategy. You stop reacting to headlines and start planning around them. Money slowly becomes a tool you direct instead of a force that controls you. You begin to see opportunities exactly where other people only see threats. This is not about getting lucky or timing some perfect magical moment. It is about understanding the rules well enough that you stop playing defense and start playing offense. You begin to think in decades instead of paydays. And time, once your enemy, slowly becomes your most powerful ally. Inflation will keep happening whether you understand it or not. The only real choice you have is which side of the transfer you want to stand on. You realize you were never truly powerless. You were simply playing the wrong game all along. And the moment the real game becomes clear, your entire future quietly begins to shift. The moment you decide to be an owner instead of a holder, you stop being the person inflation takes from. So let us go back to exactly where we started. Inflation was never simply the villain stealing your money in the night. It is a massive silent transfer of wealth, moving value away from everyone who clings to cash. And it moves that value toward everyone who chooses to own real scarce things. The headlines will keep telling you to be afraid because fear is incredibly easy to sell. But now you understand the machine underneath the fear, and you can never quite unsee it. You finally see the rules of a game you were always playing without ever knowing it. The dollar in your pocket is a melting ice cube, and assets are the freezer. The person you become when you finally understand this is worth far more than any paycheck. This one idea, once it truly sinks in, can quietly reshape the entire trajectory of your financial future. So, start today, before the next wave of printing begins, by owning one real thing instead of one more idle dollar. If this rewired how you think about money, watch this video to understand more deeply how the stock market works. I'll see you there.